Hello traders, today is the 19th of December 2011 and happy Sunday to you all. It's already Monday now in London. Happy Sunday to you all. Bonjour, bonjour, bonsoir, mes amis français. Okay, guten Tag, guten Morgen. Okay, wherever you are in the world, we wish you the very best. Okay, soon is Christmas. Okay, the title of this video is 5 things about Forex. In this video we will discuss the 5 things about the Forex market, okay, and I think you will find it very useful and understand the difference between the Forex market and the stock market. Why are we doing this video? Because a trader, a TSTWSYS08 trader, has sent us email asking me a question why I trade more Forex than the stock market, okay? Because he has noticed that in my videos I talk more about the Euro USD, my favorite currency pair, and he wants to know, okay, because this gentleman usually trade the ETF and also the stocks, okay, so he wants to know why, okay, I trade instead the Forex more than the, okay, the stock market. Okay, now one thing we need to say before we start the 5 things about the Forex market is that there is no difference between okay, the financial instrument that you are trading. Okay, that's the most important thing you need to remember. Okay, I will mention other things, but before that I will go through the 5 things that one must know about the Forex market. Okay, so now the first thing that we want to say about the Forex market is a global trading market. Okay, so it's a global trading market all over the world. Okay, people are trading the currency. Okay, so it's not like you are trading the S&P 500 or you are trading the Nasdaq 100. You are trading only the FTSE 100. You are trading one particular index. The Forex market is a global market. Okay, and there's no difference whether you are in another country or not. It's a global market. That's the first thing one must know about the Forex market. So if something is affecting, that's why if you are trading Forex, the first thing that you need to be aware of is to check the news constantly. Go to www.stochasticmoney.com, click on economy calendar. If you are trading Forex, you must constantly check the news. Go to Yahoo Finance, go to Google Finance. You cannot trade the Forex, okay, hiding in a corner somewhere. You need to know exactly what's going on because it's a global market. The political decision will affect the Forex market, okay, and what is happening in Japan will affect the Forex market. What is happening in United States will affect the Forex market. What is happening in London will affect the Forex market. It doesn't matter where you are. What is happening in Brazil will affect the Forex market. So what is happening in China will affect the Forex market. And currently people are talking about the currency war between the United States and China, because China is devaluing their currency while their goods are getting very cheap compared to United States, talking about competition and all the blah blah blah. This is about the global, okay, aspect of the currency market. So you need to understand, okay, the macroeconomic conditions of the world and how this can affect, okay, the Forex market. So the first thing one must know about the Forex market is a global market. Second thing, it's a most liquid market. Okay, so it's not like you are trading one stock somewhere, okay, and there's no liquidity. Okay, the stock doesn't move, maybe 10 pips per day. Okay, the Forex market is always moving. It's very liquid. The money is always in the Forex market. That, in fact, we do not use the volume in Forex, so because it's always moving non-stop. Okay, even in the night, even though it's quite low, I do not recommend people trading Forex during the Asia session. Still, it moves a bit compared to other stocks that remain in one place. And I look at some of the chart of some of the stock, they don't move at all. They stay in one place, and I find them very boring. Okay, but sometimes, okay, if a financial instrument is boring, you can make money quietly. This is why some banks are doing it. It doesn't mean that because it's not moving you can't make money. Some traders, especially of very quiet market, but you want to have a financial instrument that is liquid, and the Forex is very liquid, fluently moving non-stop. Okay, so that's the second thing one must know about the Forex market. The third thing that we want to talk about regarding the Forex market is that this market is 24 hours market. This is one thing. That's one thing you need to remember about the forex market. 24 hours market. Okay. The only time the forex market is closed is after what time? 10 p.m. London time. That's 5 p.m. on Friday. Okay, 5 p.m. on Friday until 4 p.m. on Sunday. That's the only time the forex market is closed. But in theory, it's not closed. It's just because we can't trade, but it's all the time open. It's 24 hours market. So that's the third thing one must know about the forex market. It's a 24 hours, and the danger of that is that traders are over trading. Okay, over trading, and they are trading during the gap period. They are trading during unsuitable period. And a lot of forex traders are losing a lot of money. Okay, so this is the danger of the 24 hours round the clock. Traders are trading anyhow, anytime, any place, because of the computerized online trading now. With your tablet, you can trade anywhere, even on a bus, on a train, in your car. You can trade anywhere, and the forex market is very addictive market. Okay, because 24 hours. Traders, myself, when I start using forex first, sometimes I don't sleep. I told traders before the story, and I would trade the London session, trade the New York session, trade the Asia session, back to the next day, falling asleep in my chair, trading non-stop. It's very addictive until I manage to control that addiction and understand that patient traders, usually win in this market. So that's why whenever I see a trader rushing, I try to slow the trader down, because I think it's very important thing to do to traders, to slow traders down. Always I slow traders down, because it's very important, because I don't want traders to get into that kind of fast lane. So it's 24 hours market. Fourth thing about the forex market is that it's directly linked to the major banks. Talking about the banks, we are talking about money. Because the bank make a lot of money. If some of you have watched some of the excellent video of Mike Maloney, if you don't know about Mike Maloney, you can type it in YouTube and you will see all video regarding Mike Maloney, gold and silver Mike Maloney, and he has explained to traders how the bank functions. The bank create money out of nothing. According to Mark Maloney, the expert of this subject, and he has said clearly to people how the bank can make money out of nothing. And there are more money, more credit. The amount of credit is higher than the amount of money in circulation in the world. So, talking about the forex directly connected to the bank. The banks, in fact, they make money out of nothing. That's what I want to say to you when I'm talking about Mark Maloney's story. Banks make money out of nothing. So forex is directly connected to the banks. So we can also try to get a bit of that portion from the bank. So the gorgeousness of the forex market is that it's directly connected to the major banks. Directly connected to the major banks. There is no exchange for the forex market. And a lot of banks intervene in the forex market very often. In fact, when you are trading forex, you are competing with the banks because themselves they are in the market. And contrary to a stock that no one cares about really, if a stock went down big time, it's an issue for the owner of the company and the shareholders. But when a currency is under pressure, it's a whole nation that is concerned. So when you are trading currency, you have to know that in fact you are trading a commodity. You are trading a commodity. It's not something. It's not a piece of paper like a share. It's a real thing. Like you can touch it. It's a gold. You can touch gold. You can touch copper. So currency is similar, but in fact there are more to that. You need to talk to Mr. Maloney about those subjects. I'm not an expert about that, but what you need to remember is that the forex market is directly linked to the major bank. That's the fourth thing one must know about the currency. So the first thing is a global market. Second thing, most liquid market. Third thing is 24 hours market. Fourth thing is directly connected to the major bank. The fifth thing is that it allows, the fifth thing that you need to know about the forex market is that because it's connected to the bank, we can tap into large banks. Now you understand, Because connected to the major bank, we can tap into large banks, take our portion from them. That's how, that's the fifth thing you have to know. So by trading forex, we are tapping into major banks. But one thing you need to remember is that the forex market is very difficult market, okay, you will see very often the currency, they trend a lot, okay, they trend a lot, okay, contrary to stock, they trend most of the time, and they move 200 people easily, okay, 100 people is nothing for the Euro USD per day, and they move a lot. But there is something you need to be aware of, is that the banks are always in the market, and the politicians are always in the currency market. And recently, as I explained to traders, is that when I explained to traders a few months ago about the manipulation of the euro currency before it started going down, we knew because it was happening. But so you will see government intervention in the currency market recently in Switzerland as the cap, okay, the exchange rate between the Swiss franc and the euro. That's a pure market manipulation, but a legal market manipulation, okay, and also the intervention of the Japanese government, okay, to devalue the yen, because the yen, rising, okay, the goods of the Japanese become more expensive, reducing their competition. So you see government intervention in the currency market very often, and they can mess up your trade sometime. So when you want to trade Forex, you know you need to be very alerted trader. You can't just sit down and place a trade, especially if you are swing trader. If you are swing trading in a currency, you have to manage your trade carefully, and be alerted and know exactly what's happening. Okay. Another thing about the Forex market is that every Wednesday, there is oil inventory. This oil inventory is a big issue for the currency market because it's connected to the oil. Oil has a link with the Forex market, and you will see very often the strategy of if myself I'm swing trading, my trade are positively profitable. By Tuesday night I'm taking some profit, because by Tuesday night a lot of speculators come into the market speculating ahead of the oil inventory. Sometimes the oil inventory is due on Thursday. You see that very often. So Sunday night, the Forex market is open again for trading, and traders, a lot of things happen, and Monday also, and it's a lot of volatility, and news related. Talking about the unemployment rate every Thursday will affect the Forex market. So when you are trading Forex, you are always checking the news before you place a trade. Another thing we need to say about the Forex market is that the correlation between currency. Now, the strategy of diversifying your portfolio is that you want to trade assets that are not positively correlated. With the Forex market, there are many assets that are positively correlated. If you are trading the Euro USD, the Australian dollar yen, the Australian dollar US dollar, the Euro GBP, all these currencies are positively correlated. And the Euro USD is the leading currency pair as I told traders. So most of the currency pair will move in the same direction like the Euro USD. This correlation fools sometimes some traders. We see very often new traders buy TSTW24 and they place trade anyhow, and they don't understand the correlation in the currency market, and they get burned. It's a very bad thing because they don't understand the correlation between it. That's why myself I trade more the Euro USD, because it's the leading currency pair. It's very fluent. You can trade it the whole day almost if you want to. It's up to you. And this is what's happened. And as soon as New York is open, if you are trading currency, you must still pay attention to the leaders like Google, Apple. They influence the Forex market as soon as New York is open. But a lot of traders are not aware of the influence of the stock market. So no market is independent. Though we are trading Forex, the market, which is the S&P 500, talking about the trading triangle, still affect the Forex market. There's no hiding. Sometimes I speak to some trader who told me that I don't trade Forex because you have to check the news all the time, and I don't want to do that, so I prefer to trade stock. They are right to a certain degree, because you may be trading a stock quietly somewhere, and the market, there can be a volatility in the Forex market that may not affect as much that stock. So what should I say to people now regarding the stock market? The stock market, you have multiple choices. Millions of stocks that you can trade, ETF and all the rest of it. You can trade as much as you like, and it doesn't require too much hard work if you are clever enough and apply the trading triangle, and the market watch, as I explained to traders. So I think If you don't want too much work, it's better to trade the stock, in my view. Okay, it's better to trade. So, but one thing you need to remember that all markets, okay, are one way or another correlated. Okay, and one will influence the other. But how do I come to the forex market? I can tell you one simple story. I was one day here in the afternoon because when I started trading forex, I trade indices. My favorite index is the Dow Jones, okay? Because it moves fast and I prefer to trade that. Dow Jones, 1500, and these are the things, the DAX 30, that's what I prefer to trade. I trade sometimes Nasdaq 100, but my favorite one is the Dow 30, okay? So one afternoon I was trading here, and I never touch any currency. I never bother to know. So I saw, I click on the chart, okay, I think by mistake, and I open the Euro USD chart, okay, and I see a pattern. Then I just decided to trade it, okay, and I traded it, and it just happened to be a profitable trade. And I'm serious, and it just worked out fast, and I thought, wow, okay, I found it so easy. And I said, well, okay. It's very interesting, okay? That's when I start paying attention to the currency market and I get involved with the Euro USD, especially the Euro USD. At that stage, I did not understand the correlation between currency, and I started learning about the correlation between currency. The USD yen, okay, and the dollar Swiss franc currency pair are negatively correlated to the Euro USD. But talking about the correlation, sometimes you may see, okay, a financial instrument that is completely negatively correlated to another currency moving in the same direction. It happened, but I don't want to go deeply into that now. I'll leave it to the side, but it happened. But so some traders will use the correlation as a magic wand in the market, thinking that it must always be like that. Sometimes it may not, okay? So the correlation is very important when you are trading, okay, currency, understanding the influence of the Euro USD, and also when New York is open, how the market leaders talking about the trading triangle will affect also the forex market. In fact, there's no hard in place for trading. As you see on this chart, it is the same thing happened. Break above it, as you see here, retest it, and turn around. Okay? It doesn't matter what you are trading, it's the same story. If you apply it carefully, break below it, retest it, and turn around. The same thing. Okay? The market is not changing anywhere. Whether you are trading stock, or currency, or whatever commodity, break above it, retest it, turn around. This is what the price is doing all the time. This is the weekly chart of Microsoft. Break above it, retest it, turn around. The same thing, okay, whether you are trading commodity, whether you are trading indices or ETF, you are faced with the same challenge, okay? But there is a bit of difference between the stock market and the forex market. In my view, if you are swing trader, you are 100% swing trader, it's better to concentrate, okay, on the stock. But the problem with this the forex market is that it moves fast, and you need to have okay, your hand on the tap all the time, know exactly what's happening. And if that's not suitable to your style, okay, you may find it very difficult. A lot of swing traders are losing, a lot of forex traders are losing money because of the influence of the news and the political influence in the forex market consistently. Talking about the Euro USD, we can see recently all the pressure on the Euro, and a meeting after meeting, okay, to push the Euro back up, and a lot of politics involved with the forex market. And if you don't like that, okay, you may prefer the stock market, because if a stock somewhere, okay, is going through a problem, is usually with their management, or their CEO, and the general market, the S&P 500, and you can sometimes have a quiet time in the stock market than the forex market. Very often, every week, there is a volatility in the stock market, and always there are news. Monday to Friday, there are news in the forex market, and there's no, okay, any special day where you can just trade forex without any news at all. Always, even in the middle of the night, you can have news regarding Australia, or news in China or New Zealand. Talking about New Zealand dollar will affect the forex market, and decisions are coming out constantly, and the forex is about trading the news, okay, constantly and attentionally. The good thing about it is that when you trade forex for a while and you gain experience, you can perfectly trade stock easily, okay? And that's the best thing. But most people think that forex is very easy, and they get into the forex market and they lose everything. Now, what I say to forex today, always the 5% money rules and a stop loss in all trade, okay? So I hope you find this video useful, okay? That you will put into practice, okay, to make a better choice for yourself and enjoy your trading, okay? Until the next time, okay, enjoy yourself, okay, and be very happy. We are the TSTWSYS08 traders. Thank you for watching, and we will speak to you very soon.